Everybody, and welcome to the Curatif Investor Webinar. I'm Robin Holt from Jigsaw Agency, and I've had the pleasure of working with the Curatif team and Matt Sanger here for a little while now in their upcoming equity crowdfunding race. Now, for just a bit of a lowdown on the structure for today, Matt is going to run us through a bit of potted history behind the business, the backstory, how it's grown so quickly, and what the very, very bright future for Curatif looks like. And that's going to take about 15 to 20 minutes, and then we're going to open up the rest of today's session for a Q&A, so you'll have all your questions answered. So please do use the Q&A box to populate all of your questions as and when they come to you. We'll be answering them in as much detail as possible. Now, as a large number of you know, we're in the expression of interest campaign right now, which is in its final week, with the investment offer opening up on Tuesday next week. This is super, super exciting for everybody involved in the team. And I think for everybody here, it's the perfect time for you all to ask as much as you possibly can and learn all about the business. Now, before I go on in too much detail and give too much away, I'd love to hand over to yourself, Matt, to quickly introduce yourself and also run through that presentation.
Thanks, Robbie. Appreciate the intro. It's a little bit different without the thunderous applause that we normally get. So hi, everybody who's joined thus far today and everybody who's joining on the recording into the future. Firstly, thank you for taking the time to have a look at what we're doing and take an interest in this capital raise. It's a pretty exciting time in our business for a variety of reasons. Thank you. Now, so a little bit of background. The company's Curatif, you're already aware of that. We make RTD cocktails. Hopefully you're already aware of that. Through the messaging, you may already know that we're pretty good at making RTD cocktails, which is not just part of my shtick and part of this presentation. It's also the opinion of the judges at the International Wine and Spirit Competition, who've named us Global RTD Producer of the Year the last 4 years in a row, which is a feat that no other producer in any other category in the 55 or 56-year history of the competition has done. There's only 2 other producers that have ever won 3 producer trophies in total. Another little startup from Healesville that you might have heard of called Four Pillars Distilling, and Foursquare Rum Distillery in the Caribbean. A little bit of a rundown as to how we're going to structure this today. I'm going to do a little bit of history of the business, where we've come from, where we're going to. We'll do a quick tour of the factory so you can meet everybody very quickly. And then we'll jump into the presentation ahead of the Q&A that Robbie will be hosting later on. So, by way of background, I come from on-premise. I ran a national hospitality group for the best part of 20 years. I got too old to be hanging around till 3 or 4 o'clock in the morning. And also, my wife and I had started another little business and scaled that and sold that. So I went off and said, look, what's next? How do we take this journey next? And so what I went and did is a Master's of Business Administration with a specialization in investment strategy and financial management, corporate finance. Which probably doesn't explain how we got here. But what I found through that journey is the same as most people do when they go through their Masters of Business Administration, which is I kept writing my research reports about things that I know about, right? I knew about the booze industry. I've grown up in the booze industry. We in Australia especially love RTD, third highest consumption of RTD per capita of any country in the world. I know cocktails. I was a baby bartender. I started bartending in the last century, which gets a big laugh with the kids when we do training these days. And of course, we know food and wine over here. So what I kept coming back to in my research reports is we've got RTD. We love RTD in Australia. We love cocktails. Why do we not have a real cocktail RTD? Right. And we sort of went through the exploration process. I wrote the business plans, took them to a couple of mates in the industry, and we said, this makes a lot of sense. Like, why don't we take this to the majors? And we took it to the majors. We took it to Dan Murphy's back in 2018, who said, look, this is exactly where this category is going, right? RTD is massive. RTD cocktails are coming. The premiumization of the category is coming. We fully support this. So we actually ended up getting a full national ranging from Dan Murphy's. We didn't have a product. We had an idea, we had a brand name, and we had brand partners who had theoretically signed on to join with us. That was in 2019 that we launched. That was in June 2019. So we're coming up on our 7th birthday, round about last week or next week. In the first 6 weeks, we picked up 366 BWS. Within the first 6 months, we picked up 1,000 distribution points nationally. 2020 came round. Crazy times for everyone. But one of the things that happened for us is this big shift in the dynamic around what can be made ready to serve, right? So restaurants started making, incredible Three Hat restaurants started making to-go meals where you could just warm them up and, and prepare them and eat them at home. And of course, bars and cocktail bars started making real cocktails, RTD. And then that shift, along with the shift of everyone buying more things online than they ever had, working from home, Zoom cocktail parties, drove this big shift in retail as well, where RTD cocktails went from being a $0 category to a $20 billion category overnight, right? And that we were perfectly positioned, of course, to take advantage of that big shift that happened in retail. And that was when the awards started. And I won't chew up too much time doing all the awards today, but we've won all of them multiple times. And then skew forward, this is 2020. The idea is we'd originally built this thing or built the business as a distributed model. So we had a distributor who was selling this stuff. We had a co-packer who was making this stuff. We had a digital agency who was doing all our digital marketing. We had a media buying agency who was doing all our media buy. Everything was out of home. And we quickly realized that the best way to be the best at what we do is to bring it all in-house. So in 2021, we raised $2.5 million with an investment consortium led by Robin Holt, who is also our chairman of the board. In his consortium are the likes of the Green family, the Singer family, Matheson family, Trent Peterson from Catalyst Investments, and Nick Griffin from Munro Partners. So we've brought together a really sophisticated, experienced investment consortium, and that allowed us to build out a lot of the facility here in Port Melbourne, which we'll see in a second. In 2022, we raised another $2 million. That allowed us to finish the facility here, build out a bit more of the team. And now we come up through 2026 where we're seeing a big shift in the industry, right? We went from being an RTD can company to being an RTD cocktail company that's making things in draft and kegs. Those draft and kegs is in response to an enormous shift in the market, right? The beyond beer movement is here. Beer is in decline, wine is in decline, spirits in total are in decline, but cocktails are in enormous growth. RTD is in enormous growth. So again, we come back to this very first solution, which is RTD cocktails become the bright spot for the industry going forward. In the last 2 years, we've started rolling out new technology for draft cocktails, and that's now rolled out into hundreds of bars, pubs, and cinemas around the country. And that's before we start talking about some of our other partners. But what that's done is it's enabled those bars, pubs, hotels, cinemas to be able to turn a tap that was previously pouring, for example, beer, and turn it into a revenue engine and a productivity driver, right? So historically, you walk into a bar, maybe it looks like this, and you say, I want an espresso martini. That bartender's then could be gone for 2, 3, 4, 5 minutes. And those 2, 3, 4, 5 minutes is time that they could otherwise be pouring beer, pouring wine, taking orders, running plates, however it is that they bring operational productivity back into the business. With our product, it means that they can make that espresso martini in 15 seconds. So in the 15-second to 3-minute rule, that means that we're driving a 93% increase in productivity. It means that we're turning these businesses into more profitable, more revenue-driven businesses. And that's where the opportunity is today. We'll talk about that in a second. I think what we'll do now is we'll go for a quick tour of the factory and you'll see some of the reasons why we're raising money. All right, so upstairs, normally our production manager up here. So this is our facility in Port Melbourne. We're in 366 square meters at the moment. Head of operations, Hannah, who's the brains of the business. Our CFO, Dana. And our national sales manager, Connor. World Cup's on because we're involved in a very competitive World Cup sweepstakes at the moment. So we moved in here in 2021 and we thought that, 366 meters on the square would be enough at that time. By the time we put our pallet racking in, so sort of week one, we quickly realized that we're going to be out of space pretty quickly. The old yellow seamers is how this all started. We started seaming on these, doing a pallet a day, so 4,224 cans a day on the little yellow seamers. Now, we do all of our fulfillment out of here, so that's over $1 million a year of stock that leaves out of that little room. And then you're going to see in a second how we've outgrown this space pretty quickly. So at the front here is our brew house down the front. What we've done is we've taken an old shipping container and some old dairy equipment and some brewing equipment and created our own coffee brewing house. So we've got our reefer out there as well where we keep all of our fresh, so lemon, lime, all of our citrus. Most dangerous room in the house, of course, the lab. The lab's where we do all of our QA, QC compliance and the most fun part, which is creating new cocktails. Production floor out here today, blending tanks, decal, filling line, nitrogen tanks, rotary seamers. Today, I don't know why I'm yelling. I've got my microphone here. Today, the guys are making Long Island iced tea for one of our great customers. That'll either be for Village Cinemas or Event Cinemas. And we'll talk about a bit more of those in the presentation. As you can see here, we're receiving tequila, rum, amaretto, whatever it is, in 1,000 litre IBCs. They come in from all around the world. But as you can also see, we're out of space, right? So one of the things that's going to need to happen soon, and we'll talk about that, is an expansion of the facility in relation to a new tank farm, carbonating facilities, kegging facilities, and potentially new monoblock canning. And then as well, it's going to be more people adding to the team. So, look, hopefully everybody's had the opportunity to review the offer document or the Pathfinder document thus far. Realistically, before we get too far into the deck, we've learned a lot over the last few years. One of the biggest lessons that we've had to learn is financial discipline, right? So this business is now profitable, which is, that's been a long journey, but it is also a very good sign for if you are considering investing. So let's talk about the opportunity. As I said there, before we came along, great cocktails, real cocktails, really only existed behind a bar where they're being handshaken. At home, which means buying, a whole bar full of bottles, fruit basket, taking the time to make it yourself. Or on shelf as an RTD, but really from a quality perspective, we've been an absolute game changer out there. So as I mentioned before, Australia is the world's third largest RTD market. And premiumization is leading that growth, right? So as it says here, bar quality cocktails, we use real spirits, we use fresh ingredients, right? So talk about some of our partners here. We're partnered globally with Disaronno Amaretto, which is of course the quintessential Italian liqueur. We have a partnership with Campari, Never Never Distilling Co. In our espresso martini, we of course source only single origin Brazilian coffee from two little farms in the Minas Gerais region of Sao Paulo in Brazil, right? There's a lot of thought that goes behind these cocktails. Now, that doesn't necessarily matter in the venue environment. What matters in the venue environment is that they can make that cocktail quickly and then they can actually have that transaction for the highest possible value. The benefit therefore in relation to productivity is it means people aren't waiting, right? And the more time that they wait, the less drinks that you're able to sell to them. Also, there's the question around consistency and everything else as well. So from a consumer perspective, as it says there, these taste like real cocktails because they are real cocktails. We can talk about some of the ingredients later if we get more time. I mentioned that 93% or 92% improvement in labor, taking a 3-minute cocktail to a 15-second cocktail. If you talk about one of the many hundreds of cinemas that we partner with at the moment, when people arrive to watch The Devil Wears Prada, they all arrive at the same time. If you've got somebody there who's handshaking cocktails at 3 minutes ago for 60 or 100 people, there's a huge time delay on that one, which means that you don't have the opportunity to increase the number of the frequency of the transaction. And then, of course, the better the cocktail is, the higher the value of the transaction. So talking about those advantages, the quality, for anyone who knows our business, the drinks come first, and they have always come first. It means that our raw materials are expensive. It means that they're reactive to oxygen. It means that we've got to have very clever proprietary technologies in order to make them, as it says there, shelf stable. So we have all of our citrus products are shelf stable up to 18 months. And then everything that doesn't have citrus in it, so espresso martini, Negroni, rum old fashioned, etc., is minimum of 3 years. We do everything in-house except for one thing, right? So, we brew the coffee here, we blend, we can, we pack, we do all of our testing that we mentioned downstairs there in the lab. Our operations team's here, our finance team's here, our sales team's here. Behind this wall is our creative studio as well. And that's, again, we're coming back to being out of space. One thing that we don't do here is we don't carbonate, and we'll talk about that in a second. And we've got partnerships. Because of that credibility we've got incredible partnerships with world-leading brands, whether it's Tia Maria, whether it's Disaronno, whether it's Campari or Appleton or whoever else that it is, Australian Open. We've got incredible partnerships, and those incredible partnerships only come around because of the fact that we make incredible drinks. So these financial figures are 9 months up to the end of March. Our other financial figures are available. We are profitable. We're going to be profitable this year, which ends in a week or something. Up to 9 months, it was 4.93, almost $5 million worth of revenue for the 9 months, which is up 35% in top line year on year. Our gross margin was up from 37% to 46%. So the actual dollar figure of gross profit was over 2.2 million, whatever it was. So it was a 69% increase year on year. We'd reached run rate profitability in February, and we've continued to be profitable for this year, and we continue to be profitable into the future. But I don't think I'm not allowed to say that, Robbie, is that right? Anyway, so
That's
bit of a channel mix there. So retail and distribution, pretty straightforward. That is our national distributor, which is Altus Brands. They distribute into the major retailers, Dan Murphy's, Liquorland, for example. They also look after a major part of our independent retail channel, and that's obviously our largest and most important channel. Our key accounts, that includes things like our cinema partners, so Village Cinemas, Event Cinemas, Palace Cinemas, Reading Cinemas, and a couple of other large accounts that we deal with who may necessarily have bespoke equipment that we have a direct relationship with. Ecom, our direct-to-consumer channel, this is our web sales. This is obviously our highest value channel from a margin perspective, but it's also our fastest channel. You know, we can make a new product, we can take it to market, we can test it with our most engaged audience, which I believe a number of people in the webinar today are those people, and thank you very much for your trade. Now, kegs, as we mentioned here, this is probably the biggest part of the opportunity we're talking about today. So at the moment, you know, kegs is growing enormously. There's been a massive consolidation across the category in relation to shifting away from, you know, having 6 taps of beer with, you know, 3 or 4 different unusual craft types to being like, okay, well, how do we turn these taps into actual growth drivers? Contract and projects includes things like the lemonades that we do for Grey Goose and Australian Open, Tennis Australia for the Australian Open, and also our white label and private label customers. So that includes things like Nando's and whatever else. And export, now export takes in a couple of things. Obviously, everything that we're already selling to New Zealand. And of course, it also, well, not of course, but it also takes in our Qantas average in spritz. So that average in spritz is 300,000 units a year of a product that we do exclusively with 4 Pillars on board for Qantas, which is all cabins, all classes international. Mentioned before in relation to, you know, the fact that we make such great drinks is a big part of the reason why we have a lot of the partnerships we do. They're mentioned there. I'll just call out a couple of the key ones that I haven't already mentioned. Obviously, Qantas is an amazing partner of ours, Marvel Stadium. We have a number of stadium and destination venue partners, including Sydney Mire, Melbourne Music Bowl and Arts Centre Precinct, Optus Stadium, amongst others. EVT takes in Event Cinemas nationally, which is 77 cinemas and 11,000 hotel doors across the country. Village Cinemas is 23 cinemas, and then Reading and Palace, which is another, call it 40 or 50 cinemas across the group. Now, category. Look, the category is the important part of the question here, right? One of our primary benefits, and this isn't in the deck, but it's just a side note, is there's nothing that we can't make in the RTD cocktail space. And let me explain that. If you're Campari, you can't make a green bottle of Campari for St. Patrick's Day because it's no longer Campari. Whereas we can make a brand new cocktail tomorrow, and provided that it's a cocktail and it doesn't matter if it's 6% ABV or 30% ABV, or if it's limoncello, or if it's rum, or if it's tequila, it's still a cocktail, which means that we have the ability to adapt to any market condition, right? People want to drink more higher quality but less often, then great, we'll make higher quality cocktails less often. People want to drink a lower ABV carbonated cocktail because they're looking for something that isn't beer, great, we'll make you a 6% mojito, hopefully with these new tanks that we're all going to do together. You know, we can react to anything that happens in market, and it's not off-brand for us, right? Mentioned there before, RTD category in Australia, 3rd largest per capita in the world. Cocktails and long drinks. Long drinks, pretty straightforward. You know, rum, cola, your hard lemonade, whatever. RTD drinkers, regular RTD drinkers has exploded since 2020 for some of those reasons I mentioned before. Regular going from 2.1 to 4.3 million. It's $2.5 billion on-premise market in Australia, which is, you know, that's significant. That's 35% in 2 years. And draft RTD going up 57%. There's a lot of the things, there's products that you would already know of in that space, that, you know, that hard lemonade world. But this is where we can differentiate there and bring something with a bit more consideration and you know, an expression to it. And our new RTD launches have obviously dropped off. You know, everyone was very excited in 2020, 2021. What a lot of people have found is the market is consolidating. The opportunity is in brands that make great drinks. It's not just about going a spray gun effect and bringing something new out every 3 weeks. And then there's that comment there. Curatif's growing at roughly 10 times the category rate. So the RTD category has grown 3.5% year on year for the last 5-6 years in a row. We're growing at about 35%. So that's where that number comes from. So where this raise takes us, right? So we're looking to raise up to $3 million. We're targeting between 1.5 and 2. The use of proceeds there has 1.225 million, which is squared away very clearly, right? Piece number one is tank farm. We're looking to procure 3 8,000 litre pressurizable blending tanks. That will allow us to do a couple of things. One, that'll allow us to carbonate on site. At the moment, we're spending around $300,000 a year in co-pack fees for our carbonated products. So that includes Average Spritz on Qantas, that includes Lemonade, Grey Goose Lemonade, and that includes our Mango Margarita Spritz. By bringing those products in-house, we're going to be able to, one, speed up our production times, two, significantly reduce our co-packing costs, and three, it's going to mean that we're going to open a whole new area of the market for us at the moment. At the moment, we can't do carbonated kegs, so it means that we can't go and compete with the hard lemonade style taps that are on at the moment and the seltzer style taps that are on at the moment. But if we are able to do that, then what we can do is we can take full expression cocktails at a lower ABV because of the benefit of carbonation. And if they are carbonated, it means that you can put them onto any beer tap without having to put in what we currently put in for our espresso martini and pina colada, for example, which is our nitrogen Venturi infusers, right? So it means that anybody can just go, do you know what? Name your beer, name the beer that you hate the most. I'm going to take that off and I'm going to put on a new 6% Curatif Mojito, right? So first and foremost, operational efficiencies to new opportunities, right? Secondly, the use of proceeds there is for a new still. Currently, we do distill some of our own spirits. They're used in both our private label, white label, co-pack customers, as well as some of our core range products. By bringing that distillation in-house, we'll be able to continue to secure the manufacturer's excise remission, which was $350,000 this financial year and $400,000 next financial year and beyond. So that's an important way to defend our margin. And then to grow our national sales team, right? At the moment, we have one in-house salesperson who looks after all of our national key accounts. By putting on somebody in New South Wales, which is our largest market, and by putting on somebody in Queensland, we're going to be able to continue to secure more taps and more growth. Now, the reason why taps are important from a growth perspective is at the end of the day, businesses like ours are eventually typically acquired. They're typically acquired through a trade sale, and that's because we have a product that is very, very hard to emulate, right? We've already got a head start out in market in quality and credibility. And then the next thing that we can do, because we're independent, is we can go and secure all those taps and get venues pouring great cocktails. And then you've got the combination of quality, proprietary technique, and volume that becomes irresistible to a trade purchaser. There's the use of proceeds there, pretty straightforward. I'm hoping that in between the communications we've sent to you up until now and this webinar today and any other comments we have going forward that we are able to achieve, the targeted raise amount. Happy to go through any questions on the use of proceeds after the fact, but I think I've covered most of it there. Oh, sorry, one part of that is the facility relocation. Obviously 400 square meters, we need more space. We need probably a minimum of 800 meters on the ground. So talking about the raise itself, there are currently 16,989,000 shares on issue at $1 a share. We're looking to raise up to a maximum aggregate subscription of 3 million. Minimum parcel start at $250. It's pretty straightforward. Now, how we got to that valuation is also fairly straightforward. Sometimes businesses can get excited with the crowdfund and go, okay, we're going to look for this, that, or whatever enterprise valuation as a revenue multiple. We wanted to price this raise really commercially. So we've set that at 2.8, 2.9. So it's a little bit less than the last 12 months now. The reason why is we're not just looking for an enormous long tail of unsophisticated investors. We want to bring new smart money onto the cap table. And the only way to get smart money onto the cap table is to price this thing appropriately and to also have a clear exit, right? Which, hopefully we can get to that point. But the most important thing there is getting that to a number where we go, okay, well, this makes sense because we've seen the Beatbox acquisition happen between 2.6 and 3.3 times. We've seen AB InBev's other most recent purchases all happening between 2.6 and 3.3 times. So that's why we've done that, the number that we've done it. Noting as well that, in the last 12 months up to the end of May, we're well over $6 million in revenue. So that revenue multiple has significantly decreased as well. Number of benefits to being a shareholder. one we haven't put on here that I think is probably the most important is bragging rights. No, just making around. All right, so we do have a number of stages there. They are set out in the offer doc, and we can probably cover them over. I don't think necessarily that everybody's coming in just to see the rewards here. I think a lot of people are coming to become shareholders because, based on the conversations that I've been having, people love the brand. People love where this is going. It's very clear in the category what we're doing. It's very clear, what the next steps are. But there are also incentives there if you do decide to join us on the journey, and those are set out on screen. I won't take up too much time of it because I'm conscious that we need to get into the Q&A. So, as it says, this isn't a concept. This isn't a Kickstarter. I haven't invented a new Bluetooth frog that lives in your shower that sings your favorite song when you walk in. This is a real business that is operated by some incredible people, that is backed by some serious funds, that has an amazing product that is going places. So we'd love to have you join us on the journey. I look forward to answering your questions.
Thank you so much for that, Matt. That was really, really insightful. Particularly loved the tour. I think it's a really great insight into what's going on in the business day to day. And thank you to everybody here who's already been populating the Q&A box. If you do have a question, please do populate it in there now. We're going to get right into it. And kicking off with Michelle's first question, which is a number of questions here, which I can see this came in fairly early. So a few of these questions has been answered. I'll just tick them off one by one. How much are you raising, on what terms, and at what valuation? We just went through that. Minimum subscription of 400K, maximum subscription of $3 million at a $16.9 million pre-money valuation, which you just explained in some detail. So moving on to the next question, what does this capital fund? Production, marketing, distribution, and expansion? We've got that minimum and maximum target in there. I think maybe, Matt, what might be beneficial is to just break down the gap between the 400K to the 3 million, and
Sure.
also maybe just talk a little bit more about the priorities of those use of funds, because you've outlined all of them, but it certainly seems to me like you're selling a lot of product, you've got a lot of product out there, you've got a huge amount of distribution, but your facility is is bursting at the seams.
Yeah. So we're correct. We're a sardine can here at the moment. So look, um, at that minimum, the way that we've prioritized that is, look, the still is probably the most
Mm,
important thing right away because we're going to need to take that action to protect that
yeah.
margin ongoing.
Mm,
We'll be finishing up our 2 years that we'll be able to lease a still in 2027. Like I think
yeah.
Q1 FY 2028. Um, look, the tanks are going to make a big difference. If we were only to raise the minimum, it'd be probably one to maybe two tanks. We'd have to do it here. It's going to mean
Mm,
squeezing a few things around. There's some ancillary equipment that's got to go with that as well in relation to carbonation, which is, we need to cool all that stuff down. So we're going to need glycol
yeah.
units, and there's a fair bit of installation that goes along with that, and some new wiring and whatnot.
Mm,
We additional salespeople on the ground is just a no-brainer right now. Like realistically, the more people that are having a conversation around curative cocktails, curative draft cocktails, the better we are for the business, right? I personally have been out there selling this thing for a long time, and it
mm,
is a very easy sell. The easiest thing that you could ever do, and I say this a lot in pitches, is I could sit here and talk your ears off about the quality of the product, but just
yeah.
try it and let the product do it for you, and it
Mm,
works, right?
yeah.
So look, that's kind of the minimum there. At that maximum, very straightforward. That production and equipment and manufacturing is, it's the tank farm, it's a new monoblock canning line, it's
Mm,
obviously the distillation. We would then as well have the advantage of making that relocation move, right? Finding a larger space. One of the advantages that we didn't speak about there is the reduction in transport costs. We have hundreds and hundreds of pallet bays out at a 3PL at the moment. There's trucks here every morning and here every afternoon. I won't give you an exact number, but the delta of transport is probably somewhere around $100,000 that we'd be able to find some operating efficiencies therein.
yeah.
Sorry, and then sales expansion. That's the additional person. Working capital is that's pretty straightforward as well. That becomes a
Mm,
war chest. That enables us to go after some new market opportunities as well. One of the things that I haven't mentioned here, but that is progressing anyway, is we are the first pallet or two of stock going to the UK is leaving imminently, as in the next couple of weeks. And look, that's a huge opportunity there. There's an article in the spirits business this morning talking about the dramatic uptake and appetite for draft and RTD cocktails in on-premise in the UK. And we've spoken about the opportunity around draft and on-premise here. It's a significantly bigger market, 2.5 times the size.
Mhm. Mm. That's fantastic. And not to jump around too much, but there was a great question around the UK expansion, which you've just touched on there, which I
Yep,
think would be really good to talk about a little bit of detail right now.
sure.
What really, what products are you focusing on? It certainly seems like the kegs in premise is an amazing opportunity, but maybe talk a little bit more about just some of the different products that you're going to be focusing on in the UK initially, because you obviously don't want to go out there and sell all of your products in the
Yep,
UK too fast, too soon.
yep,
Let's talk a little bit about that so we can better
sure.
understand.
Sure. So look, a couple of things. We've been approved for the Export Market Development Grant, which I think has another year or so, maybe two to run.
Yeah.
So look, it significantly reduced your investment to be able to receive the benefit of that grant for the export markets that are relevant to it.
Mm,
Step number one is we've just actually signed our agreement with our fulfillment partner over there. And because
mm,
of the way that the cost build works, and that's a byproduct of both significantly cheaper excise tax over there, significantly cheaper localized last mile delivery costs. It's actually going to be cheaper for us to sell product in the UK to a customer via the website than it is over here right now. So
wow.
the thing that we're going to do is we're going to start with direct to consumer, replicate exactly what we do with our website. We have a very sophisticated digital marketing ecosystem. It's very, very clever. With an increase of around 15% year on year into our digital marketing, we yield about a 30% improvement year on year. So it's becoming more efficient, more effective. We know that we can cookie cut a lot of that in the UK market. The UK has a very similar attitude towards drinking, towards RTDs, towards
Yep.
cocktails. So there's a lot of that comms that we can take and cookie cut into that market. So it becomes a low touch, low investment, right? We get that right, and then further down the road, and we haven't necessarily set aside for this in this raise. This raise really is pure growth capital, pure operating efficiencies, to continue to not only remain profitable but increase our
Mm,
profitability.
mm.
We proved that market, and then the next markets are fairly obvious over there. Well, maybe they're obvious to us because we talk about it all the day. But
Yeah.
it's Germany. Germany, huge RTD market. Love things in cans. It's Norway, Sweden. And then we push out. We don't have any eyes on the US at the moment for a variety of reasons. But of course, that would be a market that you'd be aspiring to down the road. We
Mm.
already sell into New Zealand direct to consumer, and we already have customers in, for example, in Singapore and Macau that we already sell to.
Yeah, great. And just to sort of cover this off, obviously, there's a push for a lot of brands in this space to own their backyard. Here in Australia, how big is the opportunity still for you? You've obviously got quite a lot of national distribution for the product. I'd love to learn a little bit more about your distribution networks as they currently stand and what the opportunities look like for direct to consumer and also the keg market
Yep.
here.
Yeah. So look, the keg market is probably the largest, large, may not be the largest opportunity, but it's certainly the biggest opportunity in front of us right now, right?
Mm,
Within walking distance of where everyone is right now, there's a pub that's got beer taps that are languishing. That if you turn that beer tap into a tap that's selling a $25 espresso martini or whatever, $17 espresso martini or whatever it is, whatever the right number is in that pub,
yeah.
that is an immediate benefit for the pub who's getting squeezed on productivity costs. The wage costs are higher than they've ever been, right? From them, they want to be able to serve as many drinks, full stop, as quickly as possible, right? And that means being able to serve espresso martinis, margaritas as quickly as possible. So that the biggest opportunity and probably the easiest opportunity is that draft cocktail market. We have the technology. We've already developed in relation to shelf stability. We've already developed in relation to retrofit. We've
Mm,
already worked on all of our formulations to get that ready for the carbonation stuff. So look, that's a very straightforward opportunity. Ecom's great. I mentioned before, you're able to talk directly to your consumer. As that footprint grows, it becomes more efficient, more effective. And look, there is definitely still opportunity in retail, right? every there's not it's not every sorry, it's every day that we receive a new retailer who's interested in stocking the product. We have an enormous footprint outside of retail in, for example, hotels. We're in Hilton, Hyatt, Sofitel, Sheraton, W, QT. If it's got 5 stars, it's got Curative cocktails in it. That appetite only continues to grow as well. So look, the market opportunity here continues to be enormous, and is definitely our focus. Like if you talk around where the application of effort is, our team is all here, and there's plenty right in front of us for us to go after.
Yeah, fantastic, fantastic. I think yeah, we've talked. Just jumping back to Michelle's questions here. There's a few of them, but I think I'll jump to how exposed is the business to input cost volatility? So your fruit, alcohol, packaging, etc.
Yeah, yeah, yeah. Look, Hannah and the operations team have done an unbelievable job over the last few years in absolutely getting back every piece of raw material cost that we can. Our biggest exposure isn't necessarily raw materials, it's excise, right? So, with excise being $107.99 per litre right now, and it increasing with CPI twice a year, that's where we're getting squeezed. Fortunately, or disfortunately, oh, unfortunate, I suppose is the word. That's the same. We're in the same boat as everybody who's making and selling booze in the country, right? So, no competitor has more or less of an edge in relation to excise on that particular one. For the rest of our raw materials, we work very closely with our coffee partners. We work really closely with our citrus partners. Fortunately, with global politics the way that they are, it's not so much that can affect our lemons and limes from southern Queensland and northern New South Wales. Aluminium costs are a stressor, but we just do our best to plan around them. As I say, we're no more or less exposed than the rest of the market.
Mm, mm. Yeah, absolutely. And what are your current monthly annual case volumes and revenue? You talked a little bit about, I think the best way to answer this, because you've talked about FY26 numbers up to the end of March.
Mhm.
Maybe we can talk a little bit about April and May in terms of your numbers and really what the business is doing at this point in time right now in terms of case volumes, which you've already highlighted is really pushing you guys to the limit of your current capabilities, where you are doing this capital raise to expand. So.
I tend to deal in dollar figures. Where we're at is we'll close out at about 6.2 for the year, maybe 6.3, 6.4. That'll be at around about a 46% GP margin. That is 20 odd percent, or sorry, not quite. Yeah, it's about 20% over budget for the year. Um, in relation to specificity around case volumes, is that channel mix that you're looking for that detail?
Yeah, there is actually a question a little bit further down around sort of sell-through data from retail partners
Hmm.
and some of the breakdown here. But I think as far as it's concerned, sort of your breakdown of revenue probably suffices in responding to that question. And a
Yeah,
breakdown of different retail partners, I think, is beneficial, even if it's not very, very specific. It's just a case
yeah.
of understanding which ones are key to the business's future and which ones are okay, but they just sort of sit there as a brand awareness piece.
I'll preface this question with we were told very early on in the piece. So we have the Rowe family, who are the family behind Paramount Liquor, invested in our business, and we were given some really good advice from them early on in the piece, which is don't let your business hang on or be reliant on the major retailers, which has definitely been an important lesson on the way through. Now, having said that, Dan's, we still have 150, 140 odd stores retailing us. That's in significant growth. Our current distribution partner has done a really great job working with them on building that growth. We've got great footprint still a little bit through Liquorland. A lot of independent retail, as it speaks to the wholesalers around the country, obviously, 100% nationally ranged with Paramount Liquor around the country, nationally ranged with ALM, ILG, Liquid Mix.
Yeah.
And then once you get into the independent banners, like there's
Mm,
literally dozens, if not more, of the little banners, your IGAs, Liquor Barons, Liquor Stacks, etc., Star Liquor. And that
Yeah.
goes down and down and down and down. So from the perspective of our retail partners, there's too many to name. And there's not really any that you go, look, we're absolutely reliant on them, and that's but it's partially by design, and it's partially because of how well we've been able to manage the rest of our channel mix there. It's important for us, and it's been important since we launched the website in 2020 to be able to say, okay, we need to be able to this channel to be not just profitable, but sustainably profitable and sustainably growing. And that's why there's been that big focus there on things that aren't core projects, right? So private label, white label, contract pack for us is something that we do that takes up some of the machine time as well, and it allows us to certainly fine tune and hone some of our skills in relation to product development for products that aren't necessarily core range for us.
Yeah, got it. Got it. Completely understand. And what is the reorder rate from those existing stockists?
It's a great question. I don't get as granular as that, and something I'd happily be able to do a follow up in an email for if you like.
Great.
I kind of what I'm looking at is the big new opportunities and the dollar figures. But yeah, look, happy to get the operations team to pull those numbers and send them back to you.
Yeah, fantastic. Fantastic. Well, thanks so much for all the detailed questions from Michelle there. A question here from Quinn. Now that the club has stopped, how many new drink releases do you plan to continue doing every year?
So just to go back to the case question, um, for financial year to date, is this Hen? This is 42,000 cases.
Wow.
Um, Now that the club's retired, look, we love the club. For anyone who's on the webinar who's not aware of the club, we launched the club back in 2020, and we did 2 new cocktails a month for 5 and a bit years. Um, you don't have to be a maths whiz to work out that is a lot of new cocktails over 5 and a bit years, and that kind of got us to
Yep.
a point where we were making new cocktails for the sake of making new cocktails, which was kind of defeats the point. When your whole objective is let's just make great drinks.
Mm,
Um, so we made the decision to retire that. But to answer your question on does it stop us from making new drinks? No, not at all. We work on constantly on new releases for the cinemas. We're constantly working with new partners. There's not a day that goes by where we don't have new bottles turn up on the doorsteps of new, exciting, and wonderful drinks from all around the world for us to mix together. Um, what it has done is it allows us to focus on just making great new drinks and making sure that every new release is incredible.
yeah, awesome. Awesome. That makes total sense. And ultimately, you have a sort of creative flair to create new products because you're so passionate about going out there and doing what you're doing. But ultimately, it does get to a point, no doubt, where you've got your your core product range, and actually, you'll want to make sure that you can get that out to as many people as possible, and focus on building the business in that sense. It's certainly a challenge that I know a lot of craft distillers and brewers have in the industry, where they really love the creative side of it, but ultimately at the same time they need to run their business and do what they need to do in the interests of the long-term success of the business. So that makes total sense. Debbie here has asked, will there be a difference in quality between cans and kegs? And I know you'll love to answer this question.
So, Debbie, it's the exact same liquid. Again, we come back to our kind of founding ideal here, which is I don't want to equivocate on the quality of a product just because it's going into a different format. So we've taken ages to develop the right technology to be able to retrofit existing beer taps to be able to pour an espresso martini or an amaretto sour. And the most important thing there is we do not change the liquid, right?
Mm,
This liquid is the liquid that's won all the awards. This liquid is the liquid that's won us Global RTD Producer of the Year and back-to-back World's Best Classic Cocktail, World's Best Contemporary Cocktail, and everything else. We can't
yeah,
change the liquid. That's unequivocal. So the question then is, how do you build the tech? And fortunately,
mm,
that's the point where we're at, and that's I think a really great outcome for both the business and the category.
yeah, great, great. And a question here from Hannah. NZ might be a tiny market and hard to sell off-prem because of single serve percentage regulations, but is there anything in the pipeline for on-prem? Christchurch in particular, asking for a friend.
I think this might be one of our very close friends of the business in Christchurch. Um, yeah, look, we've actually had just another inquiry today from Queenstown. We've had a number of inquiries in relation to both Christchurch and Auckland. Yeah, look, the plan is it makes a lot of sense. You know, that market's got the same issues, and every market has the same issues as well, right? Which is how do we drive productivity? How do we drive revenue in the business?
Yeah.
Yeah, look, that's the question is, how do we make that next step? And for sure, that's definitely in the pipeline.
Yeah, great, great. And a question here from an anonymous attendee. What does dividend structure look like? I think really just highlighting this, you talked a little bit about the exit opportunities with the likes of Beatbox recently. I know you can talk a lot more about other acquisitions and how you positioned the business, and you talked heavily about how you believe that the most favorable exit opportunity is an acquisition because of the nature of this market and what happens in regards to it. Maybe we can talk just a little bit about all the potential exit opportunities that
Yep,
are out there for potential investors and
sure.
what you would be open to in the future. As everybody who's here knows, you're investing in currently a liquid asset. Curative is going to use these funds to be able to go on and grow the business and put it in the best possible position to take advantage of a potential return for investors. But we cannot absolutely make a forecasted, perspective of or outline a timeline towards exit. Matt and the team will just do everything they possibly can to position the business to be in
Yeah, I
position
think
to provide that.
Robbie, to expand on that, this isn't you're not buying a blue chip mining stock here. We're not Wesfarmers or this isn't a stock that you buy or a share that you buy in a company in order to get dividends from. This
Yeah.
we want investors to come and join us on this journey. What our goal is let's move more leaders, let's make more dollars. Those leaders and those dollars drive enterprise valuations, right? The more
Mm,
9 liter equivalents that we sell, the higher the valuation is for an American acquirer. The more dollars that we sell, the higher the valuation is for an Australian acquirer.
yeah.
You've got Diageo, which is the largest spirits company in the world, who's got a clear stated intention of moving more into RTD cocktails, and that's been set out by the global CEO more recently in an interview that he's done. You've got the Managing Director of Lion in Australia who set out that they want to move into RTD because they're seeing that beer is declining, wine's declining, spirits are declining, cocktails are in growth, RTD cocktails are in growth.
Yeah.
You've got major brand, it's Ilva Serrano as well from Italy, who we're a great partner with for Tia Maria and Di Serrano, have stated
Mm,
appetite to move into RTD cocktails. So realistically, the exit ramp for us is continue to be the best in the world at what we do, continue to grow volume, continue to make more money, do it sustainably, which is the most important aspect of this year. And if we
mm.
do that, then we're building this exit ramp towards what will eventually be, you would expect, an acquisition or trade sale.
Yeah. Yeah. Absolutely. Absolutely. I think yeah, that's covered it off very, very nicely. And as far as things are concerned, the business will absolutely just there's always going to be activity in this space, and those conglomerates cannot replicate what you have put in the work to do, and that's why there's so much activity in this industry when it comes to these businesses just being acquired. So, moving on to the next question, Kyla here has asked, what fallbacks are there in the event of a supply issue for the citrus, since it's a pretty major selling point for the cocktails?
Sure. So we actually deal with a number of citrus suppliers. Fortunately, there are a number of farms.
Yeah,
We deal with the aggregator who sources juices from a variety of different farms. One of the challenges, this is completely off topic, but we'll do it anyway. One of the challenges is summer fruit and winter fruit are different. Winter fruit, denser, thicker, more pith, more
yeah,
soapy, more acerbic. Summer fruit, less skin, higher sugar profile, sweeter, more juicy, whatever, so higher yield. So look, we are constantly monitoring that. We're constantly working with our supplier. We have a number of suppliers that we deal with. And look, fortunately, this isn't a bespoke ingredient. There is a requirement for lemons and limes, grapefruits and oranges and whatever else
yeah.
all year round. So from a supply chain safety perspective, I think we're really secure from that perspective.
Yeah, great, great. And then an anonymous question: what is the life of the investment? I think just trying to sort of read into what the specific question is here, maybe covering off the specific terms of the investment. You are buying ordinary shares with voting rights.
Correct.
They are shares that, sit. in the lifetime of the company, you are effectively becoming a shareholder in the business, and that gives you the rights that are associated with ordinary shares. That means if there's an exit opportunity in the future, there will be equally proportionate dividends or a payout in proportion with the amount of equity that you own as a shareholder. So it's really
Correct.
important to read the offer document, understand the terms, but also understand that this legislation has been put together, and it's been signed off to make sure that equity crowdfunding shareholders have those voting rights in place. They have these ordinary shares, that the companies who are hosting these offers are providing, the equal opportunity for these shareholders to be able to then see an exit in proportion to the equity that they hold in the company. All the terms associated with the offer are in sections 3 and then 4 of the offer document. So do go ahead and review that when it comes out next week. But there's nothing really nasty that you would see in the offer document as a result of this offer. It's nice and squeaky clean, and Matt and the team are very much so devoted to offering you guys all an opportunity to buy into the company that he and the team has worked so hard to build.
Yeah,
Anything
and
to add?
probably just to add to that, Robbie, you're exactly right. There's the only shares that are on issue are ordinary shares. They're the same shares that we all hold. They're the same shares that I hold. They have the exact same voting rights as our
Yeah.
consortium. And so that means that any benefit that goes to any shareholder will equally flow to the shareholders that are go through from this webinar today to become shareholders in Curatif.
Yeah, absolutely. Great. And Tommy here has asked, has made a statement and asked a question at the end. I've always been really impressed by your design and the care that goes into your packaging designs. It plays really well into your craft and premium credentials. However, I have noticed a lot more use of AI in your advertising as well as some of your packaging within the monthly cocktail club, which to me does create less of a feeling of premiumness and craft. Interested in how you see the role of AI in marketing going forward. Great question.
Yeah. So it is a great question, and we've done a series of AI ads recently that we thought were funny,
Mm,
um, and they have been quite provocative out there. Look, from
yeah.
the perspective of our core products, this doesn't change. Our designer, a guy by the name of Paul Theobald in Melbourne, is
Mm,
unbelievable. We've worked together since we launched our margarita back in 2020. There's zero changes coming down the pipe for that. Paul is exclusively our packaging designer. Where we have done some AI stuff in the club labels is simply because those are super short run. They're only around for 28 days. And though obviously, as I mentioned before, are no longer continuing. But as it relates to the rest of our packaging portfolio, there's no intention to be using AI across any of that.
yeah, yeah, no,
And I might still
absolutely.
do the occasional funny AI ad, but
Yeah.
it's not going to become core.
No, no, that explains it all perfectly. And a new release 4 pack for the lounge tier. That's just the
Yeah,
question.
correct. Yeah. So we were trying to work through like, firstly, um, this offer's gone to our existing shareholder community. Sorry, existing shareholder community, our existing customer community, right? And
Mm,
it's like these are our customers who love this product. They love what we make. They love our cocktails. So we
yeah,
want to be able to do something exclusive for them that's special and exclusive and only for them. And whether that's going to be a top shelf Mai Tai or something else, it's going to be awesome.
yeah, great. Awesome. And then Daniel was asked, can backers and investors influence any of the future cocktail selections ideas? Could there be a private Discord channel where investors could connect and ask questions?
Do you know, I'll even go one better than that. Oh, was this Daniel, was it?
Daniel, yeah.
Daniel. Yeah, I go one better than this, Daniel. We run out of ideas more often than you'd believe. Just text me. Text me all of your ideas whenever you've got them. Yeah, no, so look, probably a bit more of a serious answer there. Yeah, absolutely. We've got a great our existing shareholders coming into this are all awesome, absolute legends, every one of them. And I'm sure that everybody who's here today who wants to come along for the journey has got the same intentions. And yeah, we're always keen to talk cocktails.
Awesome. Great to hear. And Vanessa has said, I understand from my British friend that the only RTD competition selling retail is Buzzballs, which doesn't sound very high quality and seems to be aimed at a younger crowd. I understand this product is popular. Can you elaborate maybe a little bit
Yeah,
on your
Buzzballs.
knowledge?
Buzzballs was just acquired by Sazerac for we don't know the exact number, but somewhere between 400 and 500 million US dollars.
Yeah.
In the UK, they have a product that looks like a Christmas bauble, high color, both ingredient and representation. It's kind of not where we play. Look, there's been high ABV, super colorful, silly RTD here forever as well. Depending on the age of the people in this call, you could be talking about Four Loko, you could be talking about Smirnoff Double Black.
Yeah.
There's always going to be room in the market for stuff at the bottom of the value chain.
Yeah.
In the UK at the moment, there are, Diageo has a canned cocktail product in our can. They do a Tanqueray Negroni, they do a Johnny Walker Old Fashioned. We have another competitor over there who is also uses the same packaging format as us, that launched after us, and you can make your own inference. At the end of the day, we will continue to be the best in the world at what we do. Again, it's not hyperbole. That's the judge's opinions, not just part of the shtick. That market is so mature on RTDs and cans. One of the highest selling RTD outlets in the UK is in a subway station, where it's just people buying RTD cans to go and take on the train on the way home.
Yeah.
I think once we're in the right position to take that market, we'll be a force to be reckoned with.
Yeah, great. Great. Just highlighting to everybody here, we really want to thank you for all the questions. I know there's only 2 minutes until the end. Technically, we'll go over by a few minutes just to cover off the outstanding questions that are here. We are recording today's session, so we will send it around to everybody. So if you do have to jump off, that's no stress at all. However, we will try and answer all of your questions in as much detail as possible because there's only a few left outstanding. Um, that question regarding the monthly subscription being taken over, we've already answered. Is the technology being used to shelf stabilize the liquid and the conversion of beer to RTD delivery system proprietary? And is there a possibility to license this tech to manufacturers in the market where Curatif is not located?
That's a great question. So the challenge from proprietary processes is the moment that you want to trademark a process, you have to publicly disclose it. There are a
Yeah.
number of things that we do to make citrus shelf stable. We've borrowed
Okay.
techniques from a number of manufacturing industries. If we were to go and sit down and publish those in order to trademark them, you'd automatically give them away to your competitors for free.
Yeah.
So that's kind of piece number one. So
Yeah.
that's the challenge towards that licensing piece.
Mhm.
The other, and obviously the disadvantage then too, while it's a good idea, is how do you monetize it? How do you then protect it? And then you end up spending all your money with trademark lawyers.
Mhm.
From our perspective, we would rather continue to keep those trade secrets confidential, continue making things the way that we make them, and in order to continue to stay at the top of the pile in relation to quality.
Yeah. Awesome. Awesome. And Debbie here has asked, is the lifetime discount transferable? E.g., if I buy in at 1K and my beneficiaries inherit it, do they get the discount? Asking for my daughters.
That's very thoughtful. It is for the lifetime of the investment. So,
Yeah.
provided
Yeah.
that your beneficiaries get your ordinary shares in Curatif, we will, of course, honor them. I hope it's not too close of an event for you.
Yeah, absolutely. And Ben here has asked, post-acquiring shares, what would the reporting structure look like in terms of updates to shareholders on financial performance of the business and therefore value of the shares at the time? Ben, there is a requirement for companies undertaking a CSF round to produce an annual report, which includes financial information in there. So that will be provided to you on a yearly basis. That's a requirement. However, I know Matt and the team will endeavor to provide you with updates outside of that.
Yeah, absolutely. So, of course, we'll comply with our obligations. We've also included, I think, an option at a certain rate to get to an annual shareholder
Yes.
tasting, which, of course, would be the opportunity to ask any questions that you like about the financials. And then being a shareholder, you've got rights under the Constitution to be able to ask questions at any time and be responded to within a reasonable time frame around the performance of the business.
Yeah, absolutely. Awesome. And out of, okay, a question up here. Just on the P&L statement, you list the OPEX as 2 million for this financial year, but it's blank for the prior two financial years. Maybe we can just elaborate on this in a little bit of detail. Also, just trying to understand your cash flow. When your margins are fairly high. So this would, SGA and A is not listed, so this would probably help to just shed light if it was included.
Yeah. So in relation to the P&L question, the reason why it's different is the FY25 year to date is our special purpose financial statements, so our standardized
Yeah.
statements that we get from our management reports from BDO.
Yes.
26, 25 and 24 is general purpose financial statements. So it's a slightly different
Mhm.
method of reporting.
Yep.
Now, so the reason why there is you've got your operating expenses in FY25 obviously includes all of your employees and other expenses, whereas your employee benefit expense and other expenses is dealt with separately. So that's
Mhm.
why you've got your operating expenses. Just trying to do some quick mental numbers, but around about 3 million in FY25, around about
Yeah.
two and a half, sorry, two and a quarter in FY24, and two FY year to date in this financial year. It's just a different method of dealing with accounting. Which
Yeah.
again, happy to share with anybody who needs them.
Maybe it's something which just because it's so specific, we can just take on offline in relation
Yeah,
to making sure that we get the necessary information across to you, and we'll just make sure that we connect you both post webinar. Bianca here has asked, and you've touched on this in a little bit of detail. What about competitors in the RTD cocktail market? You've touched on this a little bit in the UK, here in Australia. I think it's fair to say you focus more on the product and have spent more time in R&D than almost everybody else, and you obsess over this, and that has really put you in a very different position. But I'd love to know a little bit more about the positioning, where you really do think you fit in, and what advantages you'll get to reap as a result of the enormous amount of time and money you've put into R&D.
yeah, sure. Yeah, look, there are competitors, both in the Australian market and
Yeah.
overseas. We in the Australian market, which obviously is our primary market, we have exactly as you mentioned there. We've always been absolutely steadfast on quality. It's meant for a lot of the time that we've been top of category from a price perspective, which
Yeah.
will continue to be.
Mhm.
But because of that rigidity in relation to quality, relation to consistency, that has meant that, as ever, there's always going to be opportunities for people to try and do stuff cheaper than you in market. But there's
Yeah.
always can only be one person who's the best at what they do.
Yeah.
And for a lot of the businesses that we deal with our customer relationships, yes, margin's a piece. But at the end of the day, what's more important for them is being able to serve a great cocktail consistently, right? And
Yeah.
that's where we deliver, where our competitors haven't necessarily been able to make that in the past. The advantage now is our distribution footprint is so wide, our credibility and our reputation is so good
Mhm.
that it is very hard to come after us.
Yep.
In other markets, entering new markets where existing competitors already are, it's you start a little bit back at square one, but you're starting at square one as Global RTD Producer of the Year 4 years in a row. You're
Yep.
starting at square one with all the lessons that you've learned in 150 cinemas, airlines, hundreds of hotels, hundreds of pubs, thousands
Yep.
of retailers over 7 years. Our knowledge base, whilst it specializes in making very good RTD cocktails, also has a significant number of learnings in digital marketing, in operational efficiencies, in fulfillment, in logistics, in finance, and whatever else as well. So we're very good
Yeah.
at a number of things. Obviously, cocktails is the one that we're talking about here today the most.
Yeah. Yeah. Great. That's a great answer. And an anonymous question here: what portion of the company is being offered in this funding round? Based on the valuation and minimum target, you're just over 2% for the 400K, and then at about 15% for the top maximum target. But those final details will be in the offer document, which will be published next week for everybody who's expressed interest to invest. If you haven't expressed interest to invest, please do head over to OnMarket, express interest to invest. It will make sure that you're on the list to get all the updates and gain early access to the investment offer. And now, just asking the final question, which is in here, is Alana, do you have any casual jobs? Asking for me, I want in. Oh, such a great
Uh,
question.
there's plenty of casual work going on. There's always opportunity to come and pack boxes on the line. Yeah, just stay close, I think. And then as we go through this expansion, there's going to be even more work available.
Yeah,
There's
awesome.
also there's an employee benefit where you get 1 4-pack of cocktails every week, completely complimentary. So it's a very small fringe benefit that you might get.
That sounds amazing. That sounds amazing. Well, look, I wanted to say a massive thank you to every one of you who's here, who stuck with us until the end and answered such insightful questions. Matt, thank you so much for the detailed answers and really just for highlighting where the business is, what you've done to date, and where there is so much room for investors to be able to come in and join you at this incredibly pivotal point where you're not an idea by any means. You really have put in the hard yards to get the business into this position. You're globally expanding. There's a huge amount of global opportunity for the business as well. For a plucky little Australian business to be able to go out there and win as many awards as you have done is no small feat either. For I think everything we've covered off today, I know we've given a huge amount of insight into the business, but is there anything else that you feel like we haven't touched on or we haven't asked, or the investors haven't asked, which you would love to provide them as we come to the end of today's session?
Sure. Look, firstly, if everybody's hung around for this point, we've been here for a bit over an hour. That's no mean feat in itself. So thank you, firstly, for expressing your interest. Thank you for registering to be here today. Thank you for watching along if you have been here today. Thank you for some of those questions. We love, not only do we love talking about cocktails, we love talking about this business. This is a very good business that with, as I mentioned before, with some incredible people working in it. We'd love to have everybody here and everybody who watches along after the fact to come along and join us for the journey.
Awesome. Awesome. Well, Matt, thank you so much. And thank you so much to everybody who's here. As mentioned, we will send around the recording if there's any particular aspect of this that you would love to go back to and re-watch. But thank you so much for the support. It's been highly encouraging, and we cannot wait to open the investment offer next week and give you guys the opportunity to own shares in Curative. Thank you
Awesome.
so much, and goodbye,
Thanks very
everyone.
much, Robbie. Hey, great job hosting today, mate, as well, mate. Thank you.
Thanks, Matt. Great job, and take care. See you, everyone.